everybody? Hey traders, Chris Pulver here, and welcome to an earnings season masterclass. I want to take this opportunity to welcome everybody. It's 2024. Let's get things started. Lots of opportunity ahead, and it's a clean slate for the trading year. So a little bit about me. My name is Chris Pulver. I've been in the markets for over 20 years. Really quick story is I started a stock and options investment group back in 2000 with my brother, some friends and family. Ended up meeting a currency trader and full-time fund manager in 2007. So between passive investing and protecting the portfolio in stocks, learning how to trade Forex full-time from day trading to swing trading to position trading, 2007, 2008. Fast forward for the last 15 years, full-time trading, stocks, options, futures, Forex, cryptocurrencies. That brings me where I am today. I also work in financial education. I run some trading rooms, stocks and options. It's a trading room called Equities on Demand. Forex trading room called Flex Trading Room. This is from Market Traders Institute. I also give back to the trading community on my YouTube channel and Discord group. My YouTube channel is youtube.com/Chris Pulver, and my Discord server is Chris Pulver Trading. So that's free to join, free to check out. Got lots of videos out there, so check it out. But while you're here, little masterclass on earnings. Let's talk about it. So earnings season. Typically, we have quarterly earnings reports. All these publicly traded companies that are out there reporting to see whether they're doing well or doing poorly. It's important to note that also the environment, the overall macro environment, the top-down analysis is really important. Even if we have good earnings in a bear market, typically everything gets dragged lower. If we have poor earnings in a bull market, typically things get dragged higher. So overall sentiment does matter, and overall direction of the markets do matter. But we're looking at January, April, July, and October are the big key months for earnings. So for example, January 2024 will be all of the releases from Q4 of last year. Right, so we're looking at metrics like company revenue, net income, earnings per share. You certainly want to look at some keywords in the calls and transcripts, some of these Zoom calls that companies have now with their board and executives. Investors in the markets are essentially using this information to digest it for better or worse. Is it good for the market? Is it good for the company? What's the overall earnings season look like? Is it bullish? Is it bearish? Okay. Typically, the lineup is something like this: pre-earnings announcements, then the earnings reports. You look at analyst estimations, bullish or bearish. Is it an upgrade, a downgrade? See what the market reaction is. Look at price action. Following these transcripts, of course, were keywords. 2023, the keyword was AI. The keyword was artificial intelligence, right? Anything that was touching those words and keywords and phrases typically provided pretty bullish price action. The year before that was blockchain. So every year, the market kind of latches onto something that's a theme. And like I said, in the overall environment, bullish or bearish, this tends to give us some good opportunities to trade. And of course, that's what I'm interested in, is trading opportunities. So if we go into the stock market, a couple of simple ways to trade is: do you want to own the stock and you want to buy it? Or do you want to own the stock and sell it? Do you want to sell it on margin? Do you want to buy the stock and go long? So if you're just simply stock trading, can you own shares, go long, have a stop loss? Do you want to go both directions? For example, earnings season could be hit or miss. And a lot of times we have big gaps in the markets from opening bell to closing bell. So let's say the announcement is coming out. It's going to be an aftermarket announcement on a Monday afternoon. So market closes at 4 p.m. Eastern time. We have closing bell or aftermarket announcements, and an earnings report comes out for, let's say, Tesla. Okay. And then you look to see, okay, Tesla's going to be post-market movement. And then you're looking to see what the next day's pre-market and open look like. All this means is when you can trade, you're looking to see is the price up or down. And so a lot of stock traders will go both directions. You would essentially put in a buy trade with a stop loss, put in a sell trade with a stop loss, and then look for the earnings report to give us one way or the other. And the stop loss gets stopped out, or the trade that's going the wrong direction gets stopped out, but the winning side goes for, let's say, a 2, 3, 4x return or bigger. But just think about numbers. I mean, we have 500 massive publicly traded companies. We have 7,000+ publicly traded companies in the world, and there's earnings reports on most, if not all of these. One thing I'd keep in mind is historically there is a bullish bias in the stock market overall. There's roughly a 54% bias to the upside and a 46% bias to the downside. So if you're just looking at history, let's say 70+ years in trading the stock market, being a buyer is a good thing, right? So if you take that into consideration, again, what's the overall environment? Are we neutral to bullish? Better probability is just focus on buying. Okay. I also incorporate a lot of options trading with my stock portfolio. I trade options to protect my portfolio. I trade options to hedge my portfolio. I also trade options to generate income. Stocks that I own, also, I take a lot of trades with options that are stocks I don't intend to own because they're really expensive. I don't want to own, Costco at $650 unless I'm dollar cost averaging with fractional shares. But if I trade options around that, I can control 100 shares of Costco and do it for a fraction of the cost. Okay, so there's a lot of strategies that I incorporate. A lot of this in my trading room as well. But if you'd like to learn more about straddles and strangles and vertical spreads, I do that a lot. Those are very common, very kind of industry standard type strategies. But like I said, I dive into the actual earnings season history. I dive into what the company is expected to see. And that helps me, form my strategies and then also trade around it, because pricing in options and also pricing in the stock is really important. So let's go into an example here. Let me go into, let's get rid of this. Let's go into Tesla. So Tesla has earnings coming up on January 24th of this year. The website you're seeing right now is Option Slam. I use this in my trading rooms, and I want to see what the average is. So if I'm looking at the mean right here, over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 prints, the average move in Tesla is 8.93%. So we come into a chart. So I've got my 8-cap feed up. I've got my trading panel up if I wanted to trade via 8-cap. So if this is coming out the 24th of January, and I want to do a very simple strategy, I'm going to buy Tesla with a stop loss. I'm going to sell Tesla with a stop loss, and I want to see which one runs, right? That would be an easy plan if I have the stock. If I'm trading options, I'm going to do something a little bit more creative, probably a straddle or a strangle, where I take both sides of the trade, but I look at the higher move volatility-wise to the bull side or bear side to end up generating some income for me. All right, so we have earnings. The current stock price is $237.54. Let's take that 8.93%. So 237.54 times 0.893, which is my average. That gives me a move around $21.21. Now, that's the expected move, okay? That's the expected move. So I'll go ahead and just mark my chart up here. We expect the earnings average to be $21.21. Let's look at the weekly ATR as well to see what the average move is for Tesla without earnings. And then we know that earnings is typically a bigger catalyst to maybe give us some bigger daily and weekly candles. The weekly ATR there. And then we calculate kind of the high of the week, the low of the week to see what we could potentially price in our trades at. So weekly ATR, down here on the bottom, I'll go to a weekly chart. And my average ATR is 21.81. Okay, so weekly ATR is 21.81. Now, it's interesting how the earnings average and the weekly ATR are pretty much right in line. So that means that if I bought Tesla and I put, say, a $5 stop loss, and on the profit side, I go after a $20 profit target, that's a pretty good reward to risk, right? I can lose $5 on one side. I can gain $20 on the other side, give me a net profit of 15. That's a 3x return. And that's all within the context of this is what the stock can do. And certainly the stock can go through $21 in earnings. We could see a move. I mean, we've seen some candles here on Tesla. For example, that high is around 252 with a low of around let's say 212. That's a $40 candle. So we can go well beyond the $20. But again, let's trade and hopefully, take the lion's share of the move. We don't have to get the exact top or the exact bottom. If we have something that's within reason, then let's make some money on volatility, which is the whole point of earnings season. Big catalyst for the stock market: monetary policy, fiscal policy, overall macro environment, earnings season, and also volatility. So this is what I'd plan to do around Tesla. Coming up to that earnings report, like I said, if I'm planning around this $21 move, I think $20 is pretty safe. If I'm going to go long the stock with a $5 stop, go after a $20 take profit. If I go short the stock, $5 stop with a $20 take profit. Let one lose, let one win, and that's a pretty simple way. So essentially with owning the shares or buying the shares, that's how I'd place the trade on Tesla. That's kind of like a straddle with an earnings play. If I did an earnings play with options, I would basically, so we're at 237, I would do like a 240 long call and a 235 long put, and let one run, and whatever one gains more in profit, I just close it out for a net profit. So if I ended up taking the trade, it cost me, let's say, $5 to take the position, and I walk away with $2.50 to $5 in net profit, I'm happy. All right, so that's just a simple example. I'll go back to a previous example. Let's go to Nvidia. This is a stock that became super popular in 2023, one of the best performing stocks in all of 2023. If we go back and find some of these earnings seasons, I remember this one vividly because I traded this during Jackson Hole. This is a wild week in the stock market. This right here, if we go to an earnings report, we had positive earnings on Nvidia, and we also put in the yearly high. Nvidia was a big earnings report for that particular week. Jackson Hole is going on. August is also this really strange, like, summer month of trading. And post market, there was a ton of movement. Like the stock market moved like a 1.5% to 2% post market. And then Nvidia earnings came out positive. It put in a bit of a top, started the correction cycle that we saw back in late August and September, October. So nevertheless, I mean, let's look at Nvidia and look at it from this earnings history. So if I go to Nvidia, so NVDA, and we can see here that the average has been around 8.96%. If I go to the earnings history, there's my 8.96. One other tool I like to use in this option slam is post earnings. And I look to see if there's any juice behind these moves. So for example, you can see here that the post earnings open was pretty much flat, right? Negative 0.18%, but then pushed on a day to 2.45, pushed on 3 days to 4.34. So what this tells me is the stock in this case just opens pretty much where it closed the day before, but then for the 1, 3, 5 days after, ended up pushing over 4%. So that's good because there's actually movement. So if there's time in the trade, more so than just trying to get instant gratification of winning one day, let's give the trade, 2, 3, 4, 5 days. If we can trade earnings on a Monday, let it play out for the week. Something like that tends to help me give myself a little bit more time on these trades. So if I just look at this one had some juice to it where it ran further. This one went 6.57 and then ended up filling that gap within a couple of days. This was pretty interesting. 26 pulled back a little bit, ended up pushing slightly further, but 26 is a huge gap open, right? Post earnings open, that's a massive moneymaker right there. If you took a trade, around the previous day's close and it gaps up 26% or gaps down 26%, ridiculous opportunity there for some profit. 12.94 had a little bit of push to it, 14.02. Again, the average move is 8.96, right? And we're pushing here, 26%, 13%. These are more in line. These are small percentages. 1.22 that ended up going towards 3%. 2 that flipped around. We had -2 that ended up flipping to 4%. That's a 6% change. So why do I look at this? Because I want to see it's not just about the day the earnings prints. We typically have a 1 to 3 to 4 day runway of price that's going to move a little bit further. Hopefully I see if it gaps open, it runs a little bit further. If it gaps lower, it runs a little bit further. That allows my trades to take some additional profits. Okay, so in Nvidia, in this example, let's go to that weekly time frame and get that ATR. So we have the rough, and again, this is going back towards August of 2023, but this is an earnings report that I remember trading very vividly. So we had an expected move of around $31.50. Now I want to just measure this candle right here. This candle's high is $499.27, and the low is $448. That's a $51 candle. Okay, what's the expected move? $31.53. So if you're planning a trade around a $30 to $31 move and the actual week goes $50+, you can see how earnings adds to extra volatility, giving the traders lots of opportunity to cut those losers off very quickly, let those winners run, go after some pretty big returns with anticipated volatility. That's the whole point that earnings season is so exciting, is because the market is likely going to move. Between earnings season, between the Fed and the U.S. markets, between major central banks around the world moving the Forex market, this is what drives volatility. A lot of the fundamental factors are what we're talking about right here. So if you want to trade the stock market, it's great to be aware of the overall mood of the market. So if we're a majority bullish, I would tend to favor the buy side. If we're majority bearish and negative, pessimistic, then I'd favor the sell side. But again, remember historically, inherent bullish bias overall. So it comes with, peaks and cycles, and we have some structure in the markets, obviously. But for today's class, for masterclass, and just giving an overview of what I like to do during earnings season, comes down to this. There's a lot of stocks to focus on. Typically, every Sunday, Monday, I'm looking at my week. I'm trying to find some notable stocks. And what I'm doing on most of them is I find a company that has good earnings season volatility, right? So I'm going to compare the average. So if I just go to my earnings history here, I'm going to compare my average to what the anticipated daily and weekly ATR are. So if I have, an average of earnings season that is exceeding the daily trading ranges or those weekly trading ranges, that's a stock that I like to look at. Then I start to price out my trades and look to see, can my reward be bigger than my risk? And if that's typically the case, if I can go after a 2-to-1 reward to risk, 3-to-1 reward to risk, or let those profits run, use a trailing stop losses, all these things you should do in your trading, this is what I'm trying to accomplish. Okay, so I know that was a lot to throw out at you. Hopefully you're familiar with the idea of stocks, earnings season, what it all means, the data that we're looking for. But to me, it's what is the stock done in the past? What are we anticipating for this earnings season, good or bad? What's the overall landscape giving us? Is it mostly positive, mostly negative? Is it mostly bullish, mostly bearish? And from there, I price everything out, pick and choose my battles, good risk management, good reward management, and let your winners run, cut your losers off quickly. Try to keep it really simple. That's my style. Okay, so if you have any questions, let me know. You know how to find me out there. If you want to follow me, stay tuned to these Eightcap Masterclass sessions. I look forward to doing many of them through 2024 and working with each and every one of you. If you want to follow me out there on YouTube, youtube.com/Chris Pulver, and my Discord channel and server, Chris Pulver Trading. Happy trading, lots of profits. I'll see you all soon. Take care.